Today we talk about fear and greed, the two main emotions of the market. If you want, you have fundamental value of an asset, which is very different from the price of an asset. The fundamental value, we covered this in the video about fundamental analysis, is really which problem does it solve and what's the cash flow and what is the projected sales and the projected growth and the current profitability and liquidity, because that is what it's really creating in terms of value and collecting in terms of value and preserving in terms of value. Very different is the price. The price is only the latest opinion of the last two people about what it's worth right now. And it's never at fair value. It's either extremely overvalued to the moon, or it's extremely undervalued. So fear and greed, if we understand these two main emotions of the market, first, we stop losing money because we enter at the wrong point, driven by our emotions, and we exit at the wrong point, driven by our emotions, which are fear and greed. And then the second thing is we create a system for our own investments that is operating without emotions. When that number comes, you sell. When that trend switches, you buy. Simple. Simple and emotionless so that you can sleep well. You just check your portfolio in the cadence that you want to check. Very passive, you want to check just once a month. It's mostly indexes and you just check it once a month. Neutral, weekly check, and then very active daily check. And if you are an hourly trader, you check all the time. But the cadence that you set is the cadence that is good for you, for your current life situations, the number of kids that you have, the overall involvement with other responsibilities that you have, and the time horizon that your portfolio is here to serve. So let's talk about fear and greed and how you can use them. So the simple rule is when the market is in extreme fear, this is the time to accumulate. This is the time to buy most. So when you layer in hardest during extreme fear, and you layer in slightly during fear. During neutral, you do nothing. And in the extreme greed, this is where you look for taking profits, layering out of positions. Now that sounds so easy, it's not. Because of course you can check these two indicators that are free indicators that I will show right now with you. So this one you can get on CNN.com. It's the general market, stock market sentiment. Okay. And you have those indicators. And here you can see it applied to the index of the market, the S&P 500 index, and it's 125-day moving average. So you see here stock price strength in extreme fear, breadth, put and call option, market volatility. You see the emotions of the market right now in form of price and in form of, is the main emotion fear or greed? So in extreme fear you buy, and in extreme greed you sell. What if your business would run well even when you are on vacation? Discover how 1,600 business owners have regained their freedom using the Strategy Sprints blueprints. How they enjoy living their dream and watching their business scale. Get the exact checklists they use to go from stressed to fulfilled using the Strategy Sprints method. Order your copy of Strategy Sprints 12 Ways to Accelerate Growth for an Agile Business on Amazon today. And if you love it, leave us a review. For more information, head over to strategysprints.com. That's the simple principle, and you will have to adapt to it. It takes a while, it takes weeks, months, sometimes years to really get settled in this mindset that when the headlines are terrified in the news, this is where you keep cool, go back to your fundamental analysis, go back to your charts and start accumulating. You buy. And you are prepared because you have dry powder, because according to market psychology module, you know at which part of the cycle you have to free up cash and be ready for when this happens, because this is the time to buy. This is where the portfolios are created that are life-changing and exponential in returns. Because most people drop the ball here at the cheapest level, this is when, if you have that long-term horizon and you have that cash position built up, which we're teaching here you to be prepared for, then now you have the fundamentals, the knowledge, and the dry powder to deploy, and this is where you want to buy. Now, what will be hard about it? It feels counterintuitive. So all your friends are selling and you buy. And then you meet them at the cocktail party and say, oh my God, did you see what happened to Tesla? And you go, yeah, I was buying. What? So you have to overcome that herd mentality, and you have to start trusting your own numbers, your own process, your own system. That's why we create a system. Remember, it's not a get-rich-quick thing. It's a system of calculating value, fundamental analysis, calculating entry and exit moments, technical analysis, and then keeping with your conviction that comes from your system and your decisions, and they get gradually better week by week, year by year. So you sit so calmly in your decisions that you are not anymore influenced by your friends at the cocktail party or your favorite YouTubers or whatever happens around you. Say, oh, you have to buy this, look at this. You have your own system for assessing what to buy and when to buy. And that keeps you cool. And since you have no emotions where other people are highly emotional, you buy. And when they're very fearful. And when they're very greedy, you get out, like smart money does. You are one of the first one to get out at the profit, and that's the cash position that you will have for the next cycle, which is down. It will be fear again, because these things oscillate all the time. You can rely on that. Trust the process. Markets oscillate between extreme fear and extreme greed. It's only a question of time. Nobody knows the timing, but we all know the pattern, because we are humans and markets are made of humans that transact. So this is the general markets fear and greed index, and you can check it on CNN. It's free. And then there is the crypto specific fear and greed index, which you can check at alternative.me/crypto. And you will see here fear and greed. And again, we are in extreme fear 12. We were 10 yesterday. So yeah, you see here yesterday, extreme fear 10. And so you can see trends here. And this really maps quite well. If you would have bought crypto every time the fear and greed index was below 15, you would have the best accumulation over a long-term period and the best entry points. So basically you could simplify your system for Bitcoin just to be, I buy a little bit every time it is below 15. So every time it's in extreme fear. And so what would you do this week? It's a 10. This would be a moment to buy if you just look at this. But of course, you now know also technical analysis. So the second step, of course, will be also to go to the technical chart. Look at the RSI 42. 30 would be better. Then what else indicator did we learn already? You want the last run line to jump into green. It's yellow now, so it might happen in the next half an hour that it jumps green, but it also might turn red. So waiting for confirmation before doing anything. And then you can look at the Bollinger Band, volume, and many other things. But this is the quick, the lazy version. Is extreme fear. The tendency is to buy. In the grand scheme of things, it's a buying day, not a selling day. So when everybody's panicking and selling, you keep cool and you gradually accumulate, you layer into your assets that you have selected based on your 10 steps fundamental analysis. Check the fundamental analysis video if you don't know how to do fundamental analysis. And these are the two fear and greed indexes that you can use. The main thing is it's an emotional game. Become independent from emotions. Just look at fundamental analysis and charts, and fear and greed index. Extreme fear you buy, extreme greed you sell. By doing that, you win over the market psychology, which is usually exactly the opposite. Most of your friends, if they do their own investments, they buy too late when it's already up, and then they sell too early because they cannot stand all that red in their portfolio for a long time, because the markets are always irrational and they can stay much longer irrational than we can stay liquid. So it's a patience game if you do it wrong. And if you do it right, you only buy in extreme fear and you only sell in extreme greed. By doing that, you buffer a lot of the wrong volatility and you catch the right volatility that you want to have. So you de-risk the downside and you increase your exposure to the upside. Because nobody can perfectly time the market, but if you get the two main emotions of the market and learn to surf your own numbers and take your own decisions, trusting your process and not trusting the emotions of others and the viewpoints of others, then you are set to have an investment system that now serves you based on your numbers and your decisions. And your decision gets better and better every week, every month, and every year. Hope this helps and also shows you that it's a practice that takes months and years to become a good investors and a good traders, because we have to master this emotional game plus the fundamental analysis plus the technical analysis. But now you have enough data points to create your own system. Hope this helps. As always, let me know what you need next and keep rolling, everybody. If you want the how-to guide on running a resilient and agile business, get the book Strategy Sprints, 12 Ways to Accelerate Growth for an Agile Business. It offers the step-by-step blueprints to elevating your marketing and sales. Order your copy of Strategy Sprints, 12 Ways to Accelerate Growth for an Agile Business on Amazon today. If you love it, leave us a review. For more information, head over to strategysprints.com.